Today we will study one of the most realistic shovel sellers and how they are digging up from one all-time high to the next one. Now let's analyze Caterpillar.
Hi, this is Stocks in the Wild. We analyze and research interesting stock opportunities for boosting your portfolio.
In the stock market game we have a certain vocabulary. One important wisdom says, stop digging for the gold and start selling shovels. A pretty prominent example is Nvidia. They sell the shovels, which are the computer chips, while their customers like Amazon, Google and Supermicro Computer are digging for the gold, meaning Google and Co are selling their AI services to end customers or businesses. But let's get back to more real shovels, shall we? There's no better stock to explain the wisdom than Caterpillar, who are literally selling shovels, or let's say all kind of diesel-related machinery. If you've passed a construction site or roadworks recently, you've probably seen Caterpillar vehicles, like these huge diggers, wheel loaders or dump trucks. These are the most prominent products of Caterpillar, but they are diversifying their portfolio with their sub-brands, like solar turbines, where Caterpillar offers gas or oil turbines which could power small cities or data centers. Recently, I was surprised to discover a Caterpillar generator positioned next to a hotel entrance. While this may initially appear odd, it becomes entirely comprehensible given the hotel's reliance on uninterrupted power supply for essential functions such as lighting, restaurants operations, and pool maintenance. To get a better understanding what Caterpillar does, it might be interesting to see all of its sub-brands like solar turbines, Cat Rental, Cat Financial, and Cat Reman, to just name a few of them. Caterpillar is more like a complete construction supply chain, offering you the initial product by selling or renting out a diesel truck, helping you to finance this investment, and if your inventory or machinery gets older, they offer repair and maintenance support with Cat Reman, which stands for remanufacturing. Since the beginning of this year, Caterpillar has delivered an incredible return of 30%. Since the last 3 years, the increase was 85% up, and over the 10-year span, the stock tripled. While the stock has seen enormous gains over the last 2 decades, it might still be a buy, since its price per earnings ratio is still around 17. The price per earnings ratio, or short PE ratio, is one indicator to measure if a stock is so to say cheap or expensive. The average PE ratio of the S&P 500 is currently pretty high at around 30. And one of its top competitors, Hitachi from Japan, has an PE ratio of 27. So from the point of view, Caterpillar seems like a cheap stock, but let's have a look at the risk and opportunities. Since the US election pushed the stock even further and the Fed turning more hawkish lately, we might see a declining economy. Additionally, the last report in Q3 2024 was perceived as bad since all key metrics went down substantially, like the profit per share went down, for example, by 7%. So we might have seen its best momentum times, but if you're optimistic, you'll still find some opportunities in Caterpillar. Since January, Caterpillar has distributed $9 billion in shareholder returns through share repurchases and dividends. Speaking of dividends, while its dividend yield is not exceptionally high at 1.47%, you still get a solid dividend aristocrat, meaning Caterpillar has been paying higher annual dividends for an incredible 31 years. Besides its machinery and construction business, Caterpillar has its stake in the energy sector, which is likely to grow through more data center demand in the coming years. One might think that Caterpillar's business is one of the dirtiest and most unecological, selling diesel machinery and gas turbines. But in 2023, Caterpillar was number 74 among the 100 most sustainable US stocks, which is pretty good for a heavy industry company. And if new factories open for new computer chips or solar panels production, Caterpillar can offer an impressive product portfolio of heavy trucks to build up these projects. Caterpillar's board of directors consists of 9 managers, including the CEO James Appleby III, a long-term industry veteran who has managed successfully Caterpillar since 2017. So all in all, shareholders receive a highly profitable heavy industry stock in a long-term expanding business, with short-term risks of a declining demand in the construction sector, yet long-term opportunities with the growing demand for energy in data centers. Furthermore, Caterpillar's status as a dividend aristocrat further enhances its appeal. So the next time you're out in the wild, you will recognize Caterpillar's sign and remember what tremendous stock makes new roads or buildings possible. If you find this video was insightful, please leave a like, comment or subscribe. This would help our channel to grow just like your stock portfolio. Thanks and see you in the next video.